This is another episode of me documenting the day-to-day process I am taking to achieve long-term consistency in the financial markets. And today's session was not a good one. Today, I kind of went on tilt a bit. So we're going to do an in-depth review for this one and figure out exactly where I went wrong. Although I already know that, it's time to share with you guys where I went wrong. Maybe you can give me some insight, give me a little help. Now, I know a lot of you guys that are in the comment section telling me to keep my model simple and that I'm doing way too much. I think what I am doing is pretty simple. I don't know if it sounds complicated from the outside looking in, but what I'm trying to do is a 1, 2, 3 thing. The only reason why I'm experiencing all this drawdown right now is because day selection. Like looking at the economic calendar and knowing, this is a day that you shouldn't touch at all. Like today, it was an inside day. So although my bullish bias was correct and the market delivered the objective I was looking for, how it did that sucked and made it really, really, really hard to be a part of that move simply because of the economic calendar. Take a look at the economic calendar. It's blank, right? So my whole approach going into this week, I know, starting from yesterday, if I go to my daily note, let me pull it up real quick. So on the weekly time frame, let's see, I think this weekly candle is probably going to do next to nothing and perhaps stay within the range of the previous week's candle because of the lack of drivers this week, right? So this is what I said yesterday, and now I'm seeing how that is actually playing out because of the economic calendar. So if this weekly candle is probably going to do nothing because there's a lack of drivers, then why should I do anything at all? That's sound logic, right? Sound simple logic. But I've put myself in front of the screens 2 days in a row now and hurt myself on both days where I shouldn't even touch the market at all. So it's a big lesson that I'm learning about day selection. Right now when I'm doing my back testing, I'm taking a lot of time to go through and review this and figure out what are my good trading days, what are my bad trading days, and that's teaching me a lot. So if you look at my back testing results here, let me move myself out of the way real quick. We can see that even in back testing, I'm sitting around break even with a 26% win rate. Profit factor of 1.16, day win percentage at 33%, average win to loss 3.11. So the only reason I'm slightly in profit in my backtesting session is because my risk is well managed. If I keep the risk simply at 1R, then I come out at the end of the month. The issue is I'm not taking good, solid trades, mainly due to the conditions that I'm putting myself in. So with the model that I have established recently, I'm figuring out what days this model works and what days it doesn't. And I promise you guys, it is simple. It is very simple. I could explain it in a 1, 2, 3 step process. Number one, all I'm looking for is obvious liquidity from the overnight pre-market session. And then number two, I want to see the market move away from that at 9:30 and leave that level of liquidity intact, and then see it drop into some higher time frame discount array, PD array, and then show me an indication reversal. Large up candle comes back inside the range, confirms the reversal, and that's it. It's very simple. It's very mechanical. The issue is I have to get used to it. I have to get comfortable with it. I don't know how to use it right now, and this is why my results look like this. I know they're not going to look like this forever. I know that as I spend more time with this, as I continue to put in the work, things are going to start to change. But this right here I am proud of because I have never, ever, ever done this before backtesting. I've never done this before. All the times that I backtested previously in my journey, I couldn't ever, ever pull a profit. And here I am today at break even. I see that as a huge step in the right direction. I'm doing something right now that I could never have done before. So I see that as small incremental progress. The reason I'm struggling right now is I have to get comfortable with my model. I have to get comfortable with day selection and setup selection, knowing when to do stuff, when not to do stuff, when my model is present, knowing how to time that reversal, because there's all these different factors that go into it, right? You have to know what your model is. Like you could get the bias right. Your model could be there, checks all the boxes, but if you don't time the move properly, then you stop out and you don't get to be a part of that move, which is what I did a lot in my back testing. But today, that was a long monologue, wasn't it? Let's get into today. I'll explain what I was looking for going into the open and why. It's very simple, like I promise. My model is very simple. and repeatable, and it shows up there. It's there many times throughout the month, and that's all I need. What I'm working on right now is filtering out the days where it's not there. I'm gonna put myself back down here. Here we go. Okay, so on the daily time frame, well, starting from the weekly, y'all know that based on the economic calendar, I'm not really expecting this weekly candle to do much, right? Drop down to the daily. I like how this down candle traded into this down candle, and it didn't touch the midpoint of that. That's a sign of strength, and usually when the market is bullish, if we have a down candle, that sets up the next up candle day. So today I was looking for the market to draw to this high right here. That is my higher time frame draw on liquidity. Monday, daily high, previous daily high. Why? Because on the 4 hour, market trades down into this gap, closed above it. This candle barely tapped it, closed near its high, and then it was kind of hanging around right here before the open. So before the open, I wanted to see it drop down and then trade for that high right there. Now, one thing I noted about today after the close is that we have this inversion fair value gap, right? We can see that this candle is closing below the consequent encroachment of that. So below the marketplace, this is bullish, but above the marketplace, this is bearish. So now I have conflicting information. If the market is telling me that it's probably bullish and bearish at the same time, it's probably not going to be a good trading day, right? Probably not. It's also what I'm learning. Because for my back testing and my good trading days, I'm noticing that like everything agrees. All the time frames line up and say the market should go one way. It's not these time frames say I should be bullish, but this says that I should be bearish. There's no conflicting information. It's just one-sided. Like, dude, look there. You should buy the market today. And it's like, okay, I'm going to buy the market today. And it's good. A day like this, where it's like, should I buy the market? Should I sell the market? I'm not 100% confident. I end up forcing myself to pick one side over the other. And that's kind of what leads to what happened today. But because of the reaction to this gap, I'm bullish. I'm thinking the market should probably draw for these relative equal highs up in here. But we're hanging around this consolidation near the open, so I want to see the market drop down and take the relative equal lows and then trade up towards these highs, right? So my model is very, very simple. I forgot to mention the gap opening aspect of it, okay? If I'm bullish, and we have a premium gap opening, I want to see the market trade down first, clear sell side, respect that premium gap opening. I want to see it move away from the buy side first, trade down, take the sell side first, respect the gap, and then work towards the buy side. That's it. 1, 2, 3. It's not complicated. It's not difficult. On the 5 minute, where I take my first losing trade, here's what I noticed about this model. If the market has a really strong push lower at the open, tends to leave a 5 minute fair value gap, a 5 minute bearish fair value gap. The market usually rejects that gap, which pushes the market even lower. Once it moves away from that gap, then the reversal happens closer towards 10:30 in the morning. So I'm starting to learn these things. I'm starting to get comfortable with it. Now today, I knew that. I didn't play with that information though. I thought this candle right here confirmed a reversal. So it closed near its high and just kept pushing up into the gap. I thought that confirmed a reversal. This is my first loss. Bought the market somewhere in here when it left a clear gap on the lower time frame on the 1 minute chart. Although I knew there was relative equal lows below, which would give the market a reason to draw back down there. And on the 5 minute, we can see that it never really showed me solid confirmation that it was going to inverse this gap, did it? It never did, right? You can see that all these candles closed below it. Never gave me that solid confirmation is going to reject that. Now, I didn't have this annotated on my charts at the time, which is also something, just a little small habit that's making me miss a lot of clues that would give me a lot more information about where the market's going to go. So I take this gap right here, I stop out. My stop loss was right here, stopped out on that. Go to that trade right here. Here's my first loss, right? A fat loss too. So I'm getting, how do I explain it? I'm risking a lot more on these trades, and they're not good trades, and I'm losing. And I'm just digging myself into more and more drawdown, which doesn't make sense. Like, I'm risking more. I'm taking lower quality setups and risking more, and I'm just getting beat. So there's the first loss on that, right? Then the market gets pushed away from that gap, and the reversal occurs later towards 10:30, which is what I'm looking for, which is why I stuck around. So at this point in time, I knew that I'm kind of going on tilt because I see these market conditions and I know that I probably should not do anything in this market but I still end up putting risk on and I still end up taking a loss. That is extremely frustrating. Probably the worst pain that you could feel as a trader is knowing you should not do something, you do it anyways, and you hurt yourself. Something like this. That is, for me at least, that sucks. I hate when that shit happens. So that happens. That situation influences me to literally start thinking about revenge trading. In my mind, I'm literally thinking, I'm going to stick around and I'm going to revenge trade. So I catch that thought and I ask myself, even if I did anything after having this thought, it wouldn't be good. It wouldn't solidify a good habit. So why would I do anything after having that thought? I know I'm not in the right emotional state to trade. I need to walk away. But the need to get back, the want to get back is very, very strong. And I'm sticking around because at this point in time, I'm thinking the market is pretty weak, but I know that there's a chance that my setup could possibly still play out. So I'm looking at the market sit down here. I'm seeing these equal lows below. I'm thinking it could probably take those equal lows and do something like this, dive back into the range. So I see that it leaves this large obvious gap. I'm watching this gap become inverse. This candle shot back inside the range, and I really, really like that reaction. That was what piqued my interest in this idea, but it still closed below the midpoint of that, so I had to wait. This candle closed near the high of this gap right here. Closed over the high of this candle. This is when it starts to look really good for me. So once this candle closes here, I set a buy limit order here. I never get filled and the market just runs away. When the market just runs away, I'm asking myself, how can I possibly be involved in this move anymore? I really don't know. So what I do is I end up setting my limit order inside of this 5-minute buy side imbalance, sell side inefficiency to get on side with the move, because at this point in time, I'm thinking, okay, I see that the market's clearly respecting the gap. See where the body closes right there. Now at this point in time, it should obviously move for the liquidity here, right? So I'm viewing this 5-minute gap as an easy long. I think at this point in time, my setup is definitely played out. Keep in mind that this is after I knew I should have walked away. I put a long on here and I just get absolutely ran over because of the condition. It's an inside day. There's nothing on the calendar. So the market behaves something like this, where it literally just completely overlaps that. And it doesn't run up to that pre-market buy side until 12 o'clock. But for the AM session, it's just a whole lot of nothing that you should be trading at all. Like, I'm sure I probably wasn't the only one that really hurt myself today. So after today, I literally I had my biggest losing day on this account ever. So I had to, take a step back and think about, how did this happen? Well, first of all, it's the day that I'm trading. Look at the economic calendar. This is not a good day to trade. Second of all, the first trade that I took was premature. I recognized the conditions. I knew I shouldn't have traded. I knew that there was a reason for the market to go back down there. I still put risk on. I still stop out. Okay? That puts me in an emotionally influenced situation where now I want to go in there and revenge trade. So I know I should walk away because this is not a good market, but I stick around because of the loss that I take. And what does that lead to? Another fat loss. All on a day where I shouldn't have done anything at all. And that's pretty much how it goes on all my bad trading days. There's always a day where I shouldn't do anything at all. There's always a day where the conditions are shit. It's the same thing. So that leads me to the question. Why do I keep holding myself back trying to trade on days like this? Doesn't make sense. So from this point on, now I'm asking myself, should I take a huge step back and not trade for the remainder of the week? Or should I still show up tomorrow knowing that the conditions are still likely to be bad tomorrow and practice building that habit of recognizing the conditions but not doing anything? But the first loss, this trade, it's never really there. Like, I see the obvious gap. I know that there's a reason for the market to still go lower. I'm thinking that for this loss, this can be prevented once I grow more comfortable with my model and know that I should not buy the market as it's trading back up into that 5-minute gap from 930, because it's likely to push the market down away from it, and then the reversal is going to happen like this. Something like that, right? This would have been a good long setup to target at least the 930 opening price. if I market into the position right here, but I've kind of stepped away from marketing into positions because that's usually when I do something very impulsive. So as you can tell, I've got a lot to learn. There's a lot of work to be done, which is I'm putting in the fucking work. I'm working on this all the time because I'm at a point where I know the only thing that is preventing me from where I want to be is just the experience factor. To work on that experience factor, I've got to put in the hours. Got to back test. And I'll show you what I'm doing in back testing. I'm learning so much from back testing too. It's like I'm getting reps in constantly through back testing. So for every session, I'm creating a daily note. Not as long as I would for a live trading session, but just basic information that I would like to know to go back and review on, what I was looking for that on that day versus what actually happened and learn from it. So I took a lot of solid trades in this month of back testing. A lot of these trades offered room to run for like a really long time. It could have really made the month. Some of these trades I broke even on, but I'm going back through here and I'm doing a session recap, right? I'm literally doing a monthly review for my back testing month as if it were a live trading month. And this is just multiplying my experience factor. This is allowing me to learn a lot more lessons. So it's a lot of the extra work that I'm putting in right now that I think will really allow me to grow comfortable with my model in a short period of time. And that will allow me to translate these results over into a live trading market. Because everything that I'm doing in the back testing, I'm following the same process that I do when I approach the market in a live trading situation. Once I figure out, like, this is what I do, doing these exact things is what yields profitability over the long run. When I'm saying over the long run, I like to view my trading performance over the course of a month, not over the course of a day, not even the course of a week. I like to think about how I'm going to play out for that month because of how I did last month, June 2025. Now, obviously, I've given basically everything back now. I'm back to square one, right? Back to break even. Look at this. Fell off a cliff. So everything is gone now, and we're back to break even, which is fine. It's telling me a lot about how I deal with drawdown too. I'm thinking, before the trades that I took today too, I'm thinking about how I'm in drawdown, how I need to get out of drawdown. Like this and that. So many lessons that I learned. You can see that I'm still developing, right? But we're going to get there. It's going to take some fucking time, but we're going to get there. Got a long way to go, but we're going to get there. Which reminds me, I used to wake up every single day. I would hit the gym at like 4 o'clock in the morning. At the end of the workout, around 6 o'clock, I would climb the stairs back up to my apartment, look out the window, and be like, I got a fucking mountain to climb. But today, I'm one day closer. And that's the mindset that I have, It's a long, long grind. Long grind. Long journey. A lot of time spent just losing your ass over and over and over again. But you still show up the next day and you still work all day the following day. It's rough. It's really fucking rough. Sometimes I break down over this shit. Right now, it's getting rough, but I'm hanging in there. The backtesting results are showing. I know I just need to get comfortable with my model, learn some day selection, keep it simple. Like you guys always tell me in the comment section, I'm keeping it simple. And keep showing up and keep working. So that's it for this one. Talk to you next time.